So let's start off with Ra. Ra says, could you demo how to choose the best strike for selling puts with optimum premium? I usually sell cash secured puts for under $50 stocks. Okay, so the naked put cash secured approach, we'd go under the naked put tab. Ernie does have the views here for the tested monthly picks of the day and weekly picks of the day. You can read more about that there. Neutral to bullish structure, of course. Selling an out of the money put, hoping that it expires worthless in most cases, usually looking for a good probability, maybe a good delta, but probability usually takes care of that for us as well. And of course, if we get put the stock, we might convert it to a covered call, or we might convert it to a collar spread, or even a married put position. Is the highest option premium put strike or put option across the broad universe of markets usually the best one? No. Well, the highest price premium is usually the one that has the highest implied volatility due to some event coming up which could cause wild fluctuations in the stock. I can't remember which one that was, but maybe it's still in the list. So I might check the picks of the day. But in any case, Rob, where we'd start off, of course, is going into the search. Now, you want to look for selling puts with optimum premium. You usually sell cash secured for puts for stocks under $50. Excuse me, Rob. Oh, TCDA is in there. That's one I wanted to take a look at. Look at that yield, 23.8%, an option bid of 225. One of our customers, Kenneth, brought this to my attention. He said, hey, thank you for the TCDA update in the weekly picks of the day screen. The option chain is phenomenal. This thing has a report coming out on November 4th, I believe, after its earnings, but it's some type of medical thing. It's in a phase 2, phase 3 trial. I've seen $12, $15 stocks with covered calls offering a 40% downside protection, 23% return, and see the stock drop to 40 cents when the announcement comes out. So that is probably something that maybe is too volatile. I don't have the implied volatility selected. We'll do that raw in a moment. I think it's around 600% implied volatility. At least it was. Some of them were yesterday when I checked. I'm not sure if it was the 21st of October or if it was the November series. How would you set up a search for what you're looking for? And how would you look for selling puts with optimum premium? Well, the first thing we have to address is that we have the default searches set up for you as a stepping stone to use your own personal search. The weekly picks of the day that Ernie tested. Ignore all these jumbled other ones from other webinars. The monthly picks of the day. Tip sheet out of the money puts, which are monthlies, but deeper out of the money, looking for a much lower return with a higher probability of success. See, we're common names, Valero, 114 strike and 95 December. Oh, it's 49 days out. We'd want to be closer, most likely. But in any case, you can use those as a stepping stone. But at any time you have some viable criteria you would like to use, it's best to just clear the filters and let's walk through what we would look for. First off, we know what you want. Well, okay, we want shorter term. Let's just go straight to October. Nah, let's go all expirations. Let's go at least 14 to maybe 35 days out in time. If you wanted just a monthly, 8 days out a weekly RAW, you could just select it. If you wanted standard November, you want it to be at least a month out, we would just select standard November and don't put any days to expiration in. I want all expirations. And I do want to see some others. So maybe let's go 20 to 36 days out in time to include standard November, but also include some weeklies in that series. 3 weeks out, of course, 4 weeks out. Now, I'm not going to worry about any other option criteria right now. Let's jump into the fundamentals. Tab, you'll see the same 4 tabs in every search in PowerOptions. Stock price, less than 50. And if you had a minimum that you wanted to look for stocks that are greater than 5, we would just plug that in, Rob. It's a neutral to bullish strategy. So in all of our neutral to bullish defaults, 90% of them, I think, what you'll see is we're looking for a good earnings per share growth of maybe greater than 5% or maybe greater than 7%, looking for stocks that have shown positive management and good earnings. You may also want to use a PE ratio if that's something that you use, or the PEG ratio. And the market cap, this is up to you. You might be looking for small cap, you might not care. Typically, for covered calls, naked puts, even married put positions, and collars, I'd put in a field here of greater than 2,500. So the mid-cap range is 2,000 to 15,000 because it's measured in millions. So I'm going to just start with 2,500. to look for mid to large cap stocks in our price range. Now, the ex-dividend date doesn't affect the cash secured naked put, as it might a covered call if you don't want to be assigned, and the covered call is slightly in the money on the ex-dividend date. But we do want to avoid positions that have an earnings date between now and expiration, as I don't want to particularly get trapped with something that has a sudden 15 to 20 to 25% drop because of an unexpected earnings miscalculation. Even though I like the stock, why take that chance? I'd rather look at it for this strategy after the earnings come out. Now, the technicals. Average stock volume is a good one. It's commonly used in our default searches. We want to see something with some activity. You can hover over, as we did before, on the market cap, the actual filter, and we see a definition here. This one is measured in thousands. Excuse me, folks. So I'm going to put in 750. Only looking for stocks that have at least 750,000 average volume over the last 90 days. If you wanted to use RSI or Bollinger Bands, that's here as well. We are in a neutral to bullish strategy. I set my search out to be 20 to 35 days out in time, 36 days out in time to include November. So I do, and I would probably look for stocks that are currently trending upwards. Even though the market has been hectic, I want something that moves along the line with the strategy I'm using, neutral to bullish position. I may also use a MACD signal, a positive MACD where the MACD has crossed the signal line, excuse me, maybe in the last day or two, or maybe in the last 2 to 3 days, within 2 to 3 days. But we're going to leave that alone for now. Let's head to the options. Well, we've seen a hectic market. We know there's strong volatility in the market as well. So there's enriched premiums in the market. What is our safety level? Let's focus on that first. What do I mean by that? Well, I might want to be a good range out of the money, 5 to 7% based on how some movements have occurred in the past few days. In 10 days, I have one stock that's down 16%. It's in a married put. I'm only losing 4.5, but it's down 16%. So let's use a range out of the money, 20 to 35 days. Let's focus on about 7% out of the money, below the current stock price, in that case, for some protection. And this will probably also give us a relative probability of 75, maybe 80% or so. We can use both, but we'll see that going 7% out of the money is going to take care of that for us. Now, commonly, if I'm in a market where the implied volatility, the VIX, I should say, is around 30 to 35, fear gauge is very high. We know that going 7% out of the money for a 20 to 30 day trade is still probably going to give us a good yield of 1.5 to 2%. Let's just start there. Let's go to 1.5% premium. And if you have a minimum requirement for the option bid price, you can put that in. I usually don't do that. Let's get some volume in there too, and some activity. Let's look for an open interest, let's say greater than 50, and an option volume today of at least greater than 10 contracts. Should be pretty simple. Some basic criteria for the stock: reflecting good earnings, mid to large cap stocks, avoiding earnings between now and expiration, stock in an uptrend with a good average volume. Now let's go ahead and submit that search. Very basic. There's only 4 results that match that criteria. Maybe the premium is too high that we're looking for, that greater than 1.5% with 7% out of the money. But again, we've seen stocks just this week drop 3 or 4% a day. $50 stocks, $30 stocks, 2.8% declines, 3% declines. $40 stock of mine dropped 3.5% the other day, was up 4.5%, and then dropped 2.8% today. So maybe 7% is too high. Oh, and this one as well, I'd like to make another subtle change here before we look at it. But look at the probabilities are in the range we want, 83, 76. This one is not. The gap one, not as high of a probability I want. So we're going to make 2 changes here. To get more results, Rob, we're going to go less out of the money. Let's just go 5% of the money, keep our yield at 1.5%. I do want to put in an option bid price of greater than, let's say, 10 cents. This one here worries me that it has a 0 bid. That might be a wide bid-ask spread. And let's take care of that while we're here too. So I don't see something like that drug company I mentioned, TDAC or whatever it was, where the bid is 45 cents and the ask is $4. Well, there's no guarantee you're going to get that midpoint price around 220 or so. So let's narrow that down. We're going to look, I thought it was here. Oh, bid-ask spread, my apologies. For a bid-ask spread, percent bid-ask spread of less than 50. So that means that the ask price can't be 50% higher than the bid price to the ask price. So we're going to kind of restrict that a little bit. I'm going to leave our volume in place as well. So let's go ahead and run that. And it's just one now. Why is this so limited? Why are we seeing so many limited results? Is it the volume in the open interest? Doubtful. Is it the range out of the money versus the naked yield? Also probably doubtful. We know we're seeing November, but we're not seeing a lot of the Octobers. Maybe we need to drop that down to 14 and see what we get. Nope, still the same one. What's really hindering it this time? Well, in my opinion, it's two things. There's a lot of stocks that have earnings coming up between now and expiration. Whether we're looking at November, whether we're looking at October, we're in that cycle now. Big banks just launched today, and we had Pepsi launch the other day. So that could be filtering it. But again, I think the main thing that's killing it, of course, is knowing the market. In this strategy, in covered calls, collar positions, I'd want stocks that are trading in an uptrend. But recent market conditions might be taking that. So let's try again. Stock price greater than the SMA 20. Let's see if that goes in. Shorter time frame. And with Delta's movement the other day with their earnings, I believe, we start to see some of those as well. Now, let's pause for a moment here and look at some of these positions on Delta, now that we have just one stock. If I took that out, of course, if I took the uptrend out raw, let's just do it while we're here. We're going to see a lot more results. So we'll just go none versus none and hit submit. And there we go. Now you've got things in there such as Carnival, GameStop, Chewy, 56 total results. When we're sorting it by the highest naked yield. And I didn't put the probability in. I wanted to go greater than 70, maybe even 75, but we still are 5% out of the money on these positions, neutral to bullish strategies. So let's do that. And Ernie would typically suggest looking for one result per security. All right. So there, 22 results, not too bad. Plug power. We're seeing some more volatile positions in here, but we still have returns that we want for 21, 28, and 35 days. Now, if I like to position, and let's just take Nordstrom. The retail's been very tough. Chewy's has been very tough. DocuSign's been all over the map. You know, Carnival is going to have its issues, of course, with needing to fill the boats, lack of a better term, which hasn't been happening. But in any case, you've got similar time frames here and similar strikes. Which one is the best one? Well, what I might also add in here, of course, is we have the naked yield. But you probably want to take a look at your annualized percent naked yield as well. And so what that's going to tell you is that if you're able, of course, to get the premium you desire and have the position expire worthless as you want, which one's going to give you the higher annualized return? So I'm looking at the Carnival positions, 51, 40, and 65%. The shorter term trade with a similar strike, we're looking at the 5.5, 5, and the 6 strike on a stock trading at 713. Still have a good probability of 78.7%. And the annualized return is up to 65% because it's only 21 days out. If I get this 21 cents, 3.8% yield, every 21 days on this position, then I'm going to have, or a position similar to it, I should say. And we're going to get that higher annualized return, keeping it in the shorter time frame. Yes, a comment came in. Could you do weeklies? Yes, we talked about it at the beginning. I could just set to look out for standard October expiration, which is 8 days away, or just change this to 0 to 9 days, 0 to 10 days, 1 to 10 days, whatever I wanted in the days to expiration. Is this to say that the 5.5 is a bad trade? No, it's still a return of 3.9% for 28 days, and it has an 85% probability. And of course, the 5 is a good strike too. It's a 3.9% return for 35 days, lower annualized return, but it still has an 83% probability. Which one is the best one? That, of course, is going to come down to your further analysis. And what I mean by that, once I run the search, get the results that I want. Again, I did mention, of course, that Ernie would likely have selected to, of course, the November 6, 28 days out, 5.3% yield is up here as well, but it's a 75% probability. So we're going to stick with these three. However, the next step I usually do, I know Carnival, what it does, what has it been doing? I'm going to take a look at big charts, and I've got it set up the way I want. And yeah, I don't like the bottom feed. Okay, we're maybe seeing a bottom here of the MACD line where it's starting to smooth out. It's bouncing off the lower Bollinger Band. But is this something I feel confident is a good neutral to bullish position, Ra, for the next 21, 28, or 35 days? Everything's been hit hard. We all know that. But again, it's not doing what we'd really want to see. It's probably not the chart I'd prefer to see for this type of position of neutral to bullish strategy. But once you look at the chart, when we were looking at it there, we were doing our analysis. You're going to do different analysis. That's fine. Everyone has their own way of looking at it, Ra. You're going to say to yourself, okay, I have a better confidence now that it might test the 6th strike in 21 days. I feel more comfortable at 5 or maybe even 550, and that's going to sort of guide you to which one you would want to use in those cases. So, reasonable returns, reasonable range out of the money, but you need to establish that yourself. I can't tell you what those are. I used an example here. We started at 7, and we only saw a few results. We also only saw a few results 7% out of the money because we were also looking for stocks that were in an uptrend and over the 20-day or 50-day, and we're not seeing that many right now that don't have earnings coming up in the next 30 days. But that's the approach that I would use based on following the guidance, clearing the filters, setting up the basic structure that you want for an underlying security that matches the strategy. I want stocks that have shown good management reflected by earnings, a good market cap. I want to avoid any earnings surprises, maybe a good volume. I would look for a stock in an uptrend. We've got very limited choices with that. And what are my target goals for this strategy? Is it 1.5% per month? Is that what your target is? With being the range out of the money you want or with the probability you want? Put in some basic things to limit the bid-ask spread to filter out more volatile positions or wider bid-ask spreads where the midpoint is less likely to be filled. Reasonable option bid price and liquidity. Very basic. Narrow the whole universe of options down with just a few clicks to 22 total results. And if we use that one result per security right now, so I'm sorting by percent naked yield. I want to make that clear. So it grabbed the result Carnival that had the best naked yield. You could use that approach too, Ra, once you narrow your search downs. But what I wanted to show you is there's 22 total trades, but only 15 total stocks that match this criteria. And remember, we did take out the one thing I would usually look for, which is stocks trading above their 20-day or 50-day moving average, because there's just not that many right now. All right, so I hope that answers your question, Ra. You said this is very helpful. Thanks very much. You're welcome. And of course, remember, if you want to take a look at the picks of the day, monthly or weekly, you can just click on that. We are using uptrends. So what are you seeing? Ultra short Bear 3 ETFs, ultra short AIG crude oil, Bear 3 times ETFs, because we want stocks above the 50-day moving average, securities above the 50-day moving average, and Ernie's preferred default search here. And the only ones that are above their 50-day moving average are the bearish ETFs. But you can see more about that here. You scroll down, you can see the testing time frame that was used and the results. But I wanted to point this out because on PowerOptions, under the naked put or covered call, monthly picks of the day or weekly picks of the day, this is the criteria in the background that's being used, is the result of, I don't know, 75, 80, 85 iterations of different stock and option criteria that Ernie went through over the same time period to just find the one that offered the highest return at the end of each testing cycle, adjusting stops, looking for earnings, not for earnings. These are the ones he found in both covered calls and naked puts, excuse me. Okay, so you want to check those out there. And when you go to that link, of course, you can be able to, you'll see a link that says, see how we develop these results, or you'll see the results right here that you can scroll through. Trading time over the testing period, wins and losses, and you can see the criteria directly on the search tool as well.